Welcome and thank you so much for clicking on my video. It is the weekend update, which means that we have to get you guys some updated weekly expected move for the SPY and the Qs. And we're going to go over volatility because it's very important to understand as this thing is climbing up. We went through those indices last week. They're still holding some reversal signals. So is this just to give you guys some higher price points to really get faked out because volatility is still confirming some very bad signals? So it looks like we are stretching this thing out and we may even get to that monthly expected move. Maybe we set up a top this week because we do have the Fed that has some important decisions to make as far as rate cuts go after getting some terrible job revisions and some weirdly enough, people celebrating CPI, but as far as it concerns me, it's still not below 2%. So they'll have an interesting decision to make here, but we're going to get into that technical analysis today, mainly sticking with the SPY, the Qs, and going to look at volatility for today, and then make sure we keep our priorities straight. Let this be a good video for you to get some analysis, maybe set up a plan for a little bit of time here, but make sure you are keeping the priorities straight and spending some time with family, especially if you are watching this on Sunday. Let it be some good analysis, some good levels, and then make sure to do something nice for yourself or for your family. I think that'd be fantastic for this weekend. As it stands, we're just going to jump right into things here, starting off with the SPY. Have we gotten rid of any of these signals? The answer to that is no, we haven't. Truly, in order to get rid of these signals, you have to violate the main divergence points, which means we need a reading on the RSI above about 76.35. So this still means that we have a high likelihood to see that trap set in September. We already talked about last week, if you need to look at last Saturday's video about September 30th, the quarterly expected move, how we could move sideways or slightly up into it. But as of right now, the other indices and the confirmation for volatility is telling me some scary things could be happening as far as next week goes. Now, I'm not saying that to try to fearmonger you. I'm not trying to do anything. We're going to talk about both sides. But when we go to volatility, we'll have to talk about the 2-hour chart very seriously. For now, let's get you guys weekly expected moves. 664.94, taking you outside of the monthly expected move. So we can get there this week is what it overall states. So we'll watch for pullbacks that can confirm up into positive territory if need be. We see 649.88 to the downside for the weekly expected move. If you're confused what these are, maybe you've been here for a while and I haven't talked about it in a bit. This is a 68% zone, okay? So we use the options data to calculate a 68% zone. And about 75% of the time, you will tag one of these levels throughout the week. So they are very, very good places to look for stuff. And you have about a 32% chance to close on Friday outside of these levels. We usually call that, especially if it's early on in the week, we look for those things to happen to see if we're going to reverse back down into the higher percentage area. So that's something we like to do on this channel. And it's something that we teach in the courses as well. We see that the daily scale still has all the divergence points on the MACD, all the divergence points on the RSI here. Now, I know it's up right now. We still need to see that breakthrough. You need to head like 5% more up to get rid of these signals. And that's the truth of it. It is much more likely that this is a trap and we are going to end up 10% down over the next few, I would say a couple of months. I would say maybe going into end of October and seeing some kind of rectangular top here is much more likely to go 10% down from here than 10% up. Now, once again, this is not to fearmonger you. We are going to go into those shorter time frames to talk about what is going on here to see if we can get the timing down, okay? We see here that we just got a great 2-hour move. Now, the 2-hour, as far as it stands, only has a multiple point flat divergence really holding it. You can see it's very, very flat, slightly down. So the divergence point is still there, but it's not on the MACD at the same time, which means something we would look out for this week for this to actually crack down through the floor is a divergence point, right? Some kind of divergence on the 2-hour, meaning we extend the move probably into next week or something like that. Or we would look for a lower high, okay? Those are the two things we'd look for. Why? Because look at the MACD positioning. The MACD positioning is so far away from the center line that you would have to see continued selling for a long time, right? To go negative, we would have to sell off for pretty much the entire week. Unless we just saw like extreme, actually you still with your MACD would have to sell off almost the entire week. You'd have to see about 4 days of selling. Is that a high probability? It can be, but with an event like I believe it's FOMC. I'll take another check here. I believe they're getting the rate decision correct. I believe it's yeah, Fed interest rate, the FOMC economic projections. Then we'll have the Fed press conference. On a week like that, it is very rare to see people like guess what the Fed are going to do, and then the Fed do something, and then it just continues to sell off even further. It's very rare to see that. It is more likely to set a trap with that event or use the event to set a trap maybe towards options expiration for September. Now, these are all just things that we are discussing, but as we actually go into the technical side, how simple can we make this? Well, we can make it pretty dang simple by just saying, hey, if the 2-hour MACD gets by this center line and curls up into positive territory, it is very likely that unless we are seeing that curl up way down here, pretty much below, I would say, a price point of about the weekly expected move. If we see that curl off of that weekly expected move, it is very likely to make a new high and set up a divergence point on the 2-hour. So that's the actual technical analysis you need to know for the 2-hour chart. If the 2-hour rotates down, it will pull back and it can curl up into the center line just like we did right over here. Right, we can curl all the way down, and in that time we can look for what 30-minute divergence like we found down in here. So that's where we can flip over. We can go into the 30-minute chart and start to look, does this have major reversal? Well, for the time being, it looks like we could still need to talk about the bullish way higher for this because we have an extremely good amount of buyers. We're above that 5-day moving average, which is the staggered blue line right here, okay? So that means for the 30-minute, look at the space between the center line. This means we can sell down into that daily expected move, and then we can curl up into positive territory to actually set a trap. Then the 2-hour can rotate down. Then we might be able to see another upside move. That's how long this could take to play out. So as of right now, you would just put it this way. If the 30-minute pulls down without making new lows or anything like that, without breaking through the weekly expected move, if this can pull down to that center line or just curl up at any time into positive territory, it is very likely to test the high. It is very likely to go make a new one. So as we talk about the daily expected moves, you will see 659.49 to the upside. And then to the downside, we will also be seeing 655.33. Are these big ranges? No. So what I like to say on big range days are, it's a very good day for people to be caught off guard, but the most probable thing here is a dud kind of day where you just kind of see sideways drag out kind of price action, right? It kind of just does this for a bit of time, and then we probably see that curl up into what? Positive territory. Now, you do have some chances for reversal here. We've been talking about the ways for this to be bullish. Let's talk about how it could overall go bearish based on the 30-minute chart, right? And we're going to talk about things from there at the weekly expected move. You see here that we have triple divergences. We have a lot of divergences on the RSI. And if you don't include this one, I totally get it. You can include all this, and you can complete that as triple divergence. You've had 1, 2, and 3. So you do have potential triple divergence here. That tells you that this does have the probability to reverse down. And so we are going to go into volatility towards the end of this video, the VIX, and I'm trying not to make this video too long, so everyone is encouraged to watch it. So if you could take the time to go to the end of the video, that would be perfect, because the 30-minute chart, yes, it can curl up, but with the reversal signals here, if we see something bad, we see a reaction here and it sells off at this point without making a divergence, we could be in for a surprise this week. So I just wanted to mention that, and I will continue to make YouTube videos throughout the week and make sure to update Patreon. If you want weekly expected moves, if you're trading individual stocks, we will be putting out the list for all of the weekly expected moves, which are these purple lines. We're going to give those out on Patreon like we do every single week. It only costs $7. So if you're trading individual stocks and you have any of them on the right side of the screen here, you like to trade, join us over on Patreon, because it gives you that range. You can look for reversal signals there, and we post more content there as well. So as of right now, 30-minute, if it can curl up while it's positive, that's a good thing. Watch out for a divergence up at these levels. But for now, you have divergence, so it's very likely for us to go test that lower weekly expected move, okay, at this point. Let's flip back over to the Qs, and then we're going to go over volatility after the Qs. We're going to try to get through the Qs pretty quickly because they are pretty simple. The Qs, and this is why we were suggesting that the SPY could just be hitting a high number to get you to FOMO, really, because the Qs are holding the divergence on the MACD and RSI at the same time. They are not giving up any weakness. And actually, it's getting weaker and weaker and weaker. Which just tells you, as we read off the weekly expected move of 576.35 to the downside, as you read that off, it's very likely for the 2 hour to be able to get there. So for now, we would suggest, here, let's just read these off to make sure you get them. 596.97 to the upside, 576.35 to the downside. Very small daily expected moves, but 589.41 to the upside and 583.91 to the downside. This tells us that Monday should be a dry day, but the 2 hour is suggesting here that this could be a pullback still. It is still suggesting that this could be a pullback for the Qs. And we're going to talk about a bigger thing here for the Qs in a moment for a confirmation. But it does suggest, as this was able to go positive and kind of get rid of divergence in the near price action, that this 2 hour could curl down to that center line, get down towards this weekly expected move, and go for one more run. And that would be the way to continue for that quarterly OPEX. Okay, so that's a very good thing to pay attention to. But really, all you have to see is, does the 2 hour get by the center line? Does the 2 hour curl back up into positive territory? Now I'm going to talk about a bearish signal where you can still see that 2 hour move with this bearish signal confirmed. But this would be if the daily is able to cross. If you see enough selling with that event coming up, and we actually see the daily cross down over here, and then maybe we get some kind of dead cat bounce, and then we go into that October timeframe, and it's kind of bad. I would look at for this daily confirmation as a serious form of, hey, the market is super risky here. If I have any long holdings, long trades, or anything like that, I need to be extra careful with them. You have extreme divergence here for the Qs on this MACD and RSI. It is really, really close to the center line. So I think if you are paying attention to, hey, when is the market really, really risky, and when are we very likely to see things turn down? You know, markets take their time turning down. You get bounces and things like that, but it's like, hey, when is a time where I'm going to look back and 3 weeks later, I'm going to look back and be like, man, I wish I got out? It would probably be this signal right here. So I just wanted to suggest that for the Qs. Let's go over into volatility real quick. Volatility, the reason I am very serious about volatility is because this daily has not confirmed up yet, but look how close that is to the center line. Look how we have held every divergence point for the MACD, and look how you've held the 3 to 4 divergence points in the near price action for the RSI. This is a big deal. This means that volatility is most likely going to curl up on the weekly scale and be able to see some kind of positive move. Does it mean crash? Most likely not. Does it mean it can look like a crash, but is really a correction? Most likely, yes. That is potentially what we are in store for here. But we have a moment where the weekly can curl up and it'll curl back down. We are still prepping us throughout this month, even though we know the market can go up into September 30th, and it's our job in between there to see if it's going to continue. We're still aware of the risk of this signal because the daily scale here, yes, it has curled down, but now I wanted to talk about Friday, because Friday the market was booming, right? The SPY was booming, but guess what? The 2 hour is what we were talking about to pay attention to on Patreon. We were saying if the 2 hour chart is able to set up some divergence points here and it curls up by the end of the week, you have to be very, very careful going into the weekend. This means that we can start to see a disruption in the SPY. This is what you see on the 2 hour chart before that daily confirmation happens for the VIX. So that means the signal that tells you, hey, there's a high probability that volatility is about to turn up on the weekly scale, on the weekly time frame. It all starts with this 2 hour signal. And that starts right here with this 2 hour divergence here, the 2 hour divergence on your RSI and MACD at the same time. And guess what? It's not the best confirmation in the world, but it is a positive bar above that 9. It is curled up on the MACD and it's curled above the center. We would love to see that get through that dotted center line for the RSI. But this tells us there's heightened risk of doing what? Confirming back up on the daily scale. Even though the SPY made a new high, right? It went like that, the old Harry Potter lightning bolt. Did volatility break down to new lows? No. This is a very unique time where it wasn't able to break down to new lows, but instead made a new high, came back, and then has remained there. We'll see if this continues. We'll see if that 2 hour is able to tell you there's heightened risk over the weekend. That's what the 2-hour signal overall meant. So as we go back over to the SPY, we kind of give you the overall main takeaway here. It says there is a major heightened risk. Like, I know we've been saying, hey, September, there's some heightened risk, some high probable downside. There's seasonality potential downside. There's a lot of potential downside. From this point forward, with that small confirmation from volatility and going into an event where Fed rates are going to be the main discussion with all the data updates and things we've gotten, this is where the risk is extremely high. So take this information into consideration. Take into consideration that the 2-hour can continue. We can set a trap into September OpEx. We can come down to this area, and it still might be an opportunity for a nice little trade to head to the upside before we're actually going to tip down. But for now, if I wanted to be a patient, a good trader who says, hey, I was in way down here, if you were in with us, and you were just trading this thing on the swing ups, the 2-hour higher low over here for our scenario number 1, if you've been in overall since there, and the times where we have looked like we're going to downturn, you're paying attention to 30-minute divergence. The time where we're downturn and you see something crazy to the upside, you wait for your pullback opportunity, you see the higher lows, right? If you've been doing things properly, then you know these are times where the risk is very heightened and you've made enough money at this point. This tells us that the 2-hour is very likely to pull back to that center line. The 2-hour is very likely to make another upward move unless we see extreme volatility come in, which we do have that confirmation. So this is a heightened risk moment for us. It will be heightened from now into September 30th, and I will continue to update you on YouTube to try to bring you as much information as possible that I see that can really help you out, because that is the whole goal for this channel. I really appreciate you guys watching this video, especially you guys that watched to the end. I thank you so much for being a part of this community, and I encourage you that if you are trading those individual stocks, if you want an update with those individual stocks, we are going to put one out on Patreon to start off the week, or maybe going into Tuesday as we see some things pull back. So I hope that you guys enjoyed this video, and I hope you get to go enjoy time with family now that we are finished. So hope you guys have a good one. All right, peace out.